Today I want to talk about interactive brokers because it is a very unique type of broker that offers a unique exposure to the sector. I believe it is trading at a fair price under conservative assumptions, and it could even be trading at a considerable discount, assuming more optimistic or reasonable assumptions. What I like the most about the company is the fact that it focuses on two things. One, offering the best value to its customers through the lowest commission structure that I think it's available on the market as of right now. And also because it focuses on delivering the best technology so that investors and traders can extract and maximize the profits they have in the markets. And interactive brokers, as any other broker, can be quite profitable. And the interactive brokers in particular has very little capital expenditures because of its online nature. Obviously, this can have a few drawbacks, which I'll get to it. But overall, is a very profitable business that generates strong free cash flows. And in my view, this is what makes the stock so attractive. And another metric that investors should have in mind when valuing interactive brokers is return on capital, which I think stands at roughly 15%, which is very high. If you look at different businesses, they all tend to range between 8 to 12%. And if you have something between 15 and 20%, then you know you have a very special kind of business. Anything below the weighted average cost of capital tends to be business that you probably want to avoid. And typically right now what you find is a weighted average cost of capital of roughly 8%. That is a rough estimate, and obviously it depends on the business. It's a good metric if we see interactive brokers having a return on invested capital as high as 15%. After all, this speaks to the profitability of the business itself. And also what you have to have in mind is that unlike its peers like TD Ameritrade or E-Trade, Interactive Brokers has focused on making its services available worldwide, which virtually expands its market. And right now it's a small business. If you think about it in terms of brokerages, it has about 1.8 billion in revenues, which is very little compared to what it could potentially have in the future if it really exploits everything around the world. So the market opportunity for interactive brokers is huge. This is why analysts forecast a 20% plus compounded annual growth rate for the next few years. It is also worth mentioning that I've personally used the Interactive Brokers platform, and I've used it for years. I am very satisfied with the product itself. This is not endorsed, by the way, but I'm just giving you my personal experience with it. I really like the product. In fact, that's why I think so good of the stock, because I know their services are really good. They offer you a very low cost commission. They offer you great execution. The information they have available is great. And if you want to pay for professional research, you can do that, and it's all available in one platform. In fact, I use it for getting research reports. Some of them are available, and there's good information on ETFs, on securities, on bonds, and many other things. In general, it's a very, very good platform. And there's a lot of tools that you can use. There's an options trader, option scanner, bonds scanner. Like if you're an addict to the markets like I am, you're gonna love this platform. And that's why I continuously have recommended interactive brokers to my friends and family. But it is worth mentioning that it is not perfect, and the drawbacks that I've heard is that it is often too complicated to use. Unlike, say, Robinhood, where Robinhood, if you want to buy, you just simply have two options. You press buy and you have purchased your first trade. In interactive brokers, you have a vast amount of options and different settings, and this can be intimidating, especially for someone who's new, who's just trying to get into investments, into the stock market. It can be very intimidating, and it can be a turnoff. And on top of that, if you're starting, and the problem that interactive brokers has also is that since it's very focused on online, it has limited customer service, and so you're gonna be on your own. Basically, you're gonna have to watch tutorials if they're available. They do have, by the way. Interactive Brokers does have some tutorials available regarding their different tools, but even myself, I'm sometimes thinking, wow, like how do I use this? How do I use that? But yeah, it's a huge tool and can be intimidating newcomers to the markets, but once you get used to it, you realize the vast potential it has. And also, I've heard that people who actively trade, especially discretionary traders, they seem to experience the charting options in interactive brokers as somewhat clunky. Now, personally, I don't trade, so I don't face that problem myself. For what I need it, for what I use it, it's fantastic. But if I were an active trader, like every day putting 10 buy orders, 10 sell orders, maybe I could have an issue with it. I don't know. It depends on what trading style you would have. And so I suppose that could be a valid criticism, but it depends on the type of trader you are. Nevertheless, I would say that in general, Interactive Brokers offers the best value to customers because it offers the best tools and it also offers the best prices. It just doesn't get any better than that. In my article regarding Interactive Brokers, I touch on why I think the company is like that, and I think it is because of its founder, Thomas Peterfry, who happens to be an immigrant from socialist Hungary post World War II. He seems to be an entrepreneur at heart. He seems to be someone who values a fair business exchange. Unlike other brokers and other financial institutions in general, they can offer their services at much lower prices, but they simply don't do that. I think that when you look at interactive brokers, they could easily double their prices and still be the cheapest option, but they don't. And I think that's because it goes to the philosophy that Mr. Thomas Peterfry has, which I think is to offer a fair price for the services that they're rendering. And in fact, I think that it's an extremely good value as a customer, which when you put it all together, it becomes a competitive advantage for interactive brokers. And one thing I didn't touch too much on this video, but I do go on a little bit more in depth in the article, is that when you compare it to, say, a commission-free trading app, like for example Robinhood, it might look like interactive brokers is at a disadvantage because it's not free. However, you need to compare the fact that Robinhood actually sells the order flow from its clients to HFTs, which are high frequency traders that take the order flow and execute at prices that are unfavorable, to say the least, for Robinhood clients. So even though it might look like you're getting a better deal at Robinhood because you don't pay a commission, in reality, if the stock is trading at 10 and you want to buy and you buy at 10.05, then you're getting a bad execution. And that spread over many orders, it can add up. It's a lot of money. And that's why HFTs pay so much for Robinhood's order flow, and they pay so much for many of these new commission-free brokerages. But if you look at it as a whole, all the true costs that both alternatives have, then it is obvious that interactive brokers is the superior alternative, especially for investors who are regularly active in the markets. As for my valuation, I think that the company is likely undervalued if you take more reasonable estimates of growth and free cash flow. Obviously, it is important to realize that interactive brokers' revenues are much more volatile than your average company because it is tied to trading volumes, and trading volumes depend on market cycles, whether the market is very optimistic or very pessimistic. In general, I think that a good metric that it seems to be mentioned often in earnings calls seems to be that if you look at the VIX, which is the fear index, the VIX index, if you look at that, the higher it is, the better it is probably going to be for the company. And I suppose it's because the higher it is, the more volatile the markets are. And so it's a good way of betting on volatility if you're buying interactive brokers, which is a nice way of looking at things, because I've seen another popular stocks that people tend to flock is the CME, which is the Chicago Mercantile Exchange. It is often another good bet on volatility for other reasons, obviously, but I think interactive brokers could also be a nice alternative if that's what you're looking for. And in my view, interactive brokers actually trades at a much better valuation. So just want to finish with my blue skies valuation, which it could go as high as 148, which is over 172% rate of return, potential upside, which in my opinion serves to illustrate the margin of safety that you would have on interactive brokers. Personally, I don't think it's necessarily that undervalued, but I do definitely think that it should be trading much higher than its current price. So just putting it all together, I think it is a good business. It's going to continue creating shareholder value. My valuation, even under conservative estimates, it promises that investors should have roughly a 15% required rate of return going forward, which is very good, especially at this stage in the market cycle where equities are highly priced. And so it is a good value given the circumstances. Also, I think that as its business fundamentals go, I think it's as good as it's ever been. And I think international expansion is just beginning. Plus, there's China and there's the US itself, which it's also growing at a 20% clip. And that's why I decided to buy a little bit of the shares. I'm not going all in. I often talk about position sizing. Like my biggest positions are other stocks which are much safer, among them Amazon, Facebook, and Apple. But this type of stocks like interactive brokers, I do have, I think it is about 3% of my portfolio. So, and I'm willing to add to the position if necessary. And finally, if you're interested in the article where I go a little bit with more information on the subject, you can check me out on Seeking Alpha. Thank you very much, and I hope I see you soon. Bye-bye.